Executives at Robinhood allowed investors to make limited stock purchases at the end of the trading day. This after a financial fight between day traders and hedge fund managers. Many of you probably heard about the impact this app, Robinhood, is having on the market. The creators of the app set out to help everyday Americans get started with investments without having to pay commissions like most Wall Street firms. Experts are split, though, on whether this app is helping or hurting the market at this point. Joining us now to explain the situation with Robinhood and more is financial expert Terry Savage. She's the author of 4 best-selling books, and she's featured on a financial segment each week on WGN Radio. Terry, it's great to see you. It's great to have you. There are so many storylines here. People who don't even follow the market are following this right now. Give us the bottom line, the top story of all of this.
Well, it's been a very appealing story, Joe. It's been the story of the little guy on Wall Street beating up on the big hedge fund smart money guys using technology. It's like if the playground bully came every day and stole the little kids' lunch money and picked them off one by one, and then all the little kids suddenly got cell phones and arranged to gang up on the bully. That's kind of what technology did. And to understand how they did it, you need to understand a little piece of stock market that most people never look at. You know, we all know the way you make money in the stock market is very simple. Just buy low and sell high. Well, this case of short selling is completely the opposite, and it's perfectly legal and legitimate. You just sell a stock first and report that you don't own it, but you're selling it. You collect the money and you hope to buy it back when the company's maybe gone bankrupt at a very low price or pennies on the dollar. And so the Wall Street hedge funds picked stocks of companies like GameStop. Nobody's going to those retail stores anymore, bricks and mortar. That was the idea. Everybody playing games online gets their stuff online. Or nobody's going to the movies like at AMC, so how could they survive? So they were all betting the stocks would crash. What can go against a short seller, though, is if the stock goes up higher than the price he sold it at. And then you have to put up more margin money. And overnight, there was $20 billion of new margin money required from the hedge funds as the traders that were part of this Reddit discussion group kept buying and buying. And GameStop was like $20 a share early in January. It got up to over $400 a share, $325 now. And so put a real squeeze on the big hedge funds.
Right. So the hedge funds had to buy these stocks that they had shorted, including GameStop. And initially, anyway, this seemed like, as you mentioned, a great David and Goliath story where these little guys kicked the hedge funds in the teeth. What happened after that, though, is what we all need to focus on, right?
Right. But actually, the hedge funds have basically kept their short positions. They've put up money. They've come up with a lot of money. But caught in the middle of all this was this Robinhood platform, which did initiate a way for small investors to buy a few shares of stock, no commissions. It was a big technological advancement until Robinhood suddenly had all these positions on its books. And as a firm, it had to put up capital in the clearing system for all the market makers. Now, that was a problem. They decided they said they were going to protect their investors. They needed to protect their firm. Overnight, last night, they raised $1 billion in new capital, borrowed $500 million, so that when they opened today, they could allow trading. Yet again tonight, with these stocks soaring, they've put limits on trading on 50 stocks, some of them not really caught up in this, things like General Motors.
That's one of the questions, though, Terry. Where did they get that money?
Well, that's a really interesting thing because, you know, if you can trade for free and not pay a commission, how on earth would Robinhood and then followed by TD Ameritrade and many other brokerage firms, no commissions? What happens is they want to get all the orders from retail investors and they send them toward the huge matchmaking firms that are the market-making firms. And those market-making firms, many of them involved hedge funds. In fact, the largest was an investor in Robinhood.
Right.
So up came all these stories of conspiracies, the big guys bailing each other out and the little guys not being able to trade. That's a problem. It's a problem for Robinhood. It's a problem for the financial markets right now.
Well, it's a story that isn't going away for sure. Terry Savage, again, it's always great to see you. It's great to have you. Have a wonderful weekend, and we'll talk soon.
Thanks, Joe.